Okay, Isam, we're live. Welcome everybody to Wall Street Reporter's next Superstock live stream for December 22, 2020. Back with us, one of our all-time favorites, CloudMD, Dr. Isam Hamza, DOCRF, DOC. Isam, welcome back.
Thanks, Jack. Thanks for having us.
So again, for those of you who get it, we always have new people coming into our platform. So again, our focus with these live streams is to bring you those companies which we believe have that 10x to 100x upside potential. Companies going after multi-billion-dollar market opportunities with multiple catalysts in place and at a key inflection point. And CloudMD certainly fits that profile. So we're going to find out today about some of them. We're going to talk about Dr. Hamza, we're going to talk about some facets of the company which we haven't really had a chance to focus on yet, which is the health tech, the technology platform side. I think it's a key, very valuable part of the business, and and again, I think investors kind of need to know like what's CloudMD's role in that digital transformation of healthcare. That's the big theme, digital transformation of healthcare, massive theme right now. So with that said, you had an announcement recently. You're acquiring, is it Idea4? What?
Yeah.
How do you pronounce
exactly it? Yeah. So it's IDYA4 or Idea4.
Okay.
Yeah, and it was, it's so much. There's only so much you can put in a news release, and especially with something that might look like it's complicated, but really isn't. But it was a massive announcement. I think it was very extremely important, and I don't think everybody really totally understood how big of an announcement it was, how big of an acquisition it was for our company, and how it's going to change things for everybody. And I'd love to talk more about that if you have any questions about it.
Of course, that's the whole idea, right? So and of course the audience is going to have a lot of questions. So that's what we want to do, because again, before we started the live stream, we were kind of talking in the background. You said, "Wow, this is a very transformation." You called it a transformational acquisition.
Absolutely.
And I don't think the market really understood, because there wasn't a big reaction. I mean, I know the stock has been creeping up, but there wasn't a big reaction when it was announced. So please explain, what does the company do? Why is it important? And how is it going to fit into CloudMD's big picture?
Yeah, so maybe let's start with the people. I mean, the people behind it are the most renowned and most respected people in that industry in the States, to the point where they have associations and contracts with the federal government there, right? The U.S. Department of Defense and Justice and CDC and Homeland Security and so on. Even to the point where some of the founders were involved in some of the commissions after like the 9/11 and so on. The whole idea is that I said idea twice now. The whole concept basically is Idea has a platform, and they're experts in the ability to connect different data sources, right? Different software, different databases, and different different platforms to connect together and talk, right? And why that's important is, if you think about it, if somebody's using something and it's only working for their organization, but they need information from somewhere else, how do they get it, right? How do they talk to another database? So how does a clinic talk to a hospital or a radiology department? Or how does one clinic talk to another clinic in terms of that data? And I'll give you kind of a really high level example of something they actually do that is, again, really taking off for them. The doctors.
Hey, Dr. Hamza, you know what let me just add, because for the investors in our audience, what they want to know is, what does this mean for the stock? So I think it's important to understand that you're solving the problem, which is a multi-billion-dollar opportunity. There's whole companies. I think it's like Workday, Palantir. There's multiple companies that are basically their whole business revolves around helping that connectivity, and there's so much multi-billion-dollar market cap. So
exactly, there's so much data out there, but how do you access it in a secure and safe way and be able to use it, right? So data is very, very valuable, but it's almost useless if it just sits there. And so they have the ability on their platform to start using data and getting corporations to able to access their data, analyze their data, share their data in a safe way, basically. And so, for example, like I said, a patient could go to a doctor and let's say ask for an opioid, a narcotic. And how does that doctor know that that patient didn't already get it from another clinic or a different county or somewhere else, right? And so this doctor shopping and opioid crisis exists because of the fact that nobody's talking to each other in the US in particular. And so a lot of these counties and states and organizations are paying IDEA considerable money for their platform that has the ability to connect all these different players. And so that at the doctor's fingertips, while they're seeing the patient, they go, oh, no, you already got it from so-and-so, right? So that information becomes instantaneously and securely delivered to a point where they can make a decision immediately. And that's extremely valuable. And not just that, and you'll notice this now with the government that was, but the government that's coming as well, is that it's going to be probably standardized where you have to, as a practitioner, you have to check these databases, right, before you give a narcotic, right? Because the opioid crisis is because of the fact that, let's say, doctors or patients are going around and getting it from different places.
Right.
So
there's other pharmaceuticals, there's a lot of reasons why you want to have that connect. Okay.
Yeah.
So it's very interesting because you said something that's just okay. So it's very interesting because this is going to be something that you expect to become like something mandatory in the healthcare world.
100%. And the reason I say 100% is it's already mandated up here in Canada, in some parts of Canada. So, for instance, in British Columbia, we already have that. We already have kind of a province-wide database, and we can't give out, let's say, a narcotic until we check it to make sure that they didn't get it from somewhere else within the province. Now, they don't really have it between provinces, so theoretically, a patient could fly back and forth and get it from different parts. But eventually, it'll be nationwide, right? And that's the whole point of it: is how does the database here talk to another database somewhere else across Canada or whatever? They have the ability to connect them now, and we own IDEA now. And so IDEA is going to help us not only expand across the US side, but also Canada as well. So we're going to introduce their services and their software up here too. But more importantly, we've been growing very, very quickly, Jack, right? I mean, we bought a lot of different companies and have different technologies, and they're all amazing companies and successful in their own right. How do you start connecting all these, right? How do you do this? We've been doing it, but now we have experts in the field that are going to be able to do it for us much faster, much more securely with their platform, their proprietary platform. And so now can we start combining the Snap Clarity app with the CloudMD app, with the My Health S app, with the the LiveCare app, and so on.
So once you have this kind of seamless turnkey, whole person healthcare solution, that becomes extremely valuable.
Yes.
As a business.
Yeah, absolutely. Because now the data can also be used and monetized in a safe way. Because that was always the big holy grail, but also the big issue is how do you do it? How do you use the data in a secure, safe way? And like I said, their proprietary platform will allow it. So that's extremely valuable, like you said before, right? And that's something that, like I said, is I think not, to the point where if you look at our news release, Jack, I mean, it was the first time ever that we actually released the performance criteria for the seller to achieve the rest of their price, right? What they got paying for it, right?
Okay.
And so we showed that they have to go from, I think, a 4 million revenue to 6 million after 2021 to 8 million, 8.5 million, I think, for something for 2022. Those are conservative targets from their end. They think they're going to do much better than that. But we've never even released it because we thought, oh my God, that's so aggressive on their part. They're like, no, that's okay. We're good with it. So they're really confident just on their side of it that they're going to be able to increase the revenue considerably with these large contracts, again, with Homeland Security and CDC and so on. They're massive contracts and growing quickly at the state level as well as the federal level and so on. So that's great, but that's even without the synergy of everything they bring to us on all our other aspects of our company, from, like I said, increasing the revenue across the border to our other divisions and so on as well. So we're extremely excited, and I think it was a really great acquisition, and I have to commend our team that really got it across the finish line.
Okay, so so because this really ties everything in, ties all the facets of your technology, of the tech platform, ties everything together. So that, that's kind of the finishing touch almost for the tech platform in a way. Unless, so because I mean, that's kind of the key, and that's, again,
and these are world experts, right? So we're bringing in a world expert set of team, like a team basically, to help with this, which is again invaluable. Not just the platform.
I think if anybody in the audience is familiar with Workday, does Workday do that type of thing, but in like enterprise software? If any comments from anybody in the audience, please let us know, because I think that we could say that this is kind of like this would be something very, very similar. So Dr. Hamza, so now that you have the tech platform, right? So and I think we should maybe talk about, just give it like a quick snapshot of all the different components, because again, some people may not be familiar. Like, you had the the patient education part, and they all tie in. They all have a value. Can you just give an overview?
Yeah, no, absolutely. So on the tech side, right, we have the Juno EMR that's used by just under 400 clinics across Canada, 3,000 practitioners, and about almost 3 million patient charts in Canada. And then we have ClinicAid, which is the billing solution that integrates into Juno or can be standalone as well. And then we have LiveCare, which is a standalone telemedicine component that we have an offering. And we have Snap Clarity, which is our amazing mental health app and service that people can download, use, get a dashboard, find out what's wrong, as well as connect to one of the therapists across the country. Right now it's in Canada. We expect to expand it right across North America and internationally going forward. So that's going to be a massive expansion for us, I think, and we're pretty excited about that. And again, IDEA is going to help on that aspect of it. And because and then we have Benchmark on the US side as well, the Benchmark Technologies, again, the AI automation and the different tools, and another 5.5 million patient charts, and another 1,000 practitioners. And then on top of all of that, and then IMD, obviously the patient education tool, that's award-winning and world-class, that works with every single one of our companies. But because we're able to do all that, and we own the clinic, and we have these practitioners, and we have the ecosystems, and we own everything ourselves, we're not relying on any third-party software and so on. We are able to offer enterprise solution now to insurers, the largest insurers and the largest corporations, for a one-stop shop, basically one vendor for the first time ever, where they can get everything from mental health to physical health to primary care to specialist care to rehab, public and private, for their employees or their customers, without having multiple vendors. And that's, again, unheard of in the space. And we should see like a huge growth in that division for us in 2021 here. So we're really excited about that too. That's only scratching the surface. I could go on for another 2 hours, Jeff. So I'm thinking I'll wait for you to ask me a question, because otherwise.
Today we're gonna kind of keep it very, very, very short, because I know you're on a tight schedule. We're gonna come back in January, but I want to kind of ask you one key thing is, there is the healthcare space is heating up, right? So you have kind of you have the teledocs, and you have companies that you have the 1MDs, what is it, 1MD or so companies that are doing like they're focused purely on, like, let's call it the roll up of clinics, all these areas. So I think the key differentiator for cloud is really this tech platform. In addition, so you really have that turnkey solution, and I would say that having this massive tech platform also makes the company a lot more attractive down the road for, again, like I always like to bring in the Amazon of the world and people, because tech companies, they see the value of the technology side as being useful in helping scale a business like yours.
Yeah, so I'll kind of go back to something that I think is really, really important, right? Is that we've been doing this for years, actually decades, and we've never had to pivot our story. We've always talked about this. We went into, the creation of CloudMD 3 years ago as a public entity with the mission statement that still sticks to today, right? We said the whole idea of everything we do is that patients is totally disrupting the way healthcare is delivered, a patient-centric model. Everything circles around the patient, using technology to connect to that patient and we own the full ecosystem so that we can provide a seamless, intuitive, efficient way of kind of a team-based care for that patient to get better outcomes. We said that from day one. We never said COVID or whatever. I mean, we've said this from day one, that this is the future of healthcare. And now you're starting to see all companies, including the biggest companies, and including, you know, Teladoc and some other ones, shifting into that same idea of a whole person care, the ecosystem, providing the, you know, the combination of virtual with, you know, virtual triaging with the physical aspects of it and so on. So everybody's shifting to that. We've always said that that was going to be the way that the world is going. But because we did this from the beginning, every single one of our puzzle pieces, every single one of our acquisitions for the last, you know, 2-3 years has been with that in mind. And so it really helped us grow to a point now where we're ready to take off. That was just a platform. We were just creating the platform for the rocket ship, if you want to use an analogy there, the puzzle pieces basically.
We use that analogy a lot, if you notice, the rocket ship.
There you go. Yeah, so we were putting the puzzle pieces together for that platform. And we're, you know, we're pretty much there now. We're able to kind of see the fruits of our labor now going forward. And it's not lost. I mean, it's not lost that, you know, we went from a year ago, nobody in the industry, whether it's investors, institutions, or large corporations knowing who we were, to now, I think everybody's aware of what we're doing. And again, I don't think it's any secret kind of what we're doing and where we're going. So we're extremely excited. And we think 2021 is going to, I mean, 2020 was a crazy year for the company for sure. And we think 2021 will be a transformational year for the company.
Okay, so 21. Okay, so now you have basically the platform, everything is you have the platform in place, right? So 21. So I think the story right now is, okay, what is going to happen in 2021? So let's kind of jump into some questions. Speaking of which, enterprise. I think Dawn wants you to talk about enterprise. Is enterprise going to be? Are we going to be seeing some news flow on that front?
Yeah, 100%. I mean, that was the reason we put all those puzzle pieces together, from medical confidence to IMD to refunction to Humanicare. I'm probably going to miss some because we've been moving so quickly here. But the key thing is that we have those puzzle pieces together, and now we can start announcing these large, and again, enterprise, the great thing about it is when you get it, you tend to get, you know, 7-figure deals per year, multi-year, right? For each one aspect of delivery. So that might be only for mental health. There might be another contract for physical rehab, another one for short-term stressors, another one for triaging. And so the great thing about us is that we're able to provide a package solution to these companies. So we'll be able to kind of hopefully start announcing these bigger deals, multi-year deals, and so on, which is great.
Okay. Let's see. We got questions about. So we got questions about the was it? Let me see. A bunch of them came in right now. Let me see if I can pull up the. This is regarding the mental health agreement with the Canadian government. What you're doing there?
The Mental Health Commission and so on. Yeah, partly with IMD. Yeah. Yeah, one thing you're going to see is, remember, all these companies were extremely successful on their own. You have to remember that. But they were private companies, so you never heard of them. You never heard of the stuff they were doing and who they're working with, some of the biggest names in the industry, in the world. So think about that, is that each one of these has news flow on their own, and they're tied to some of the biggest organizations and government agencies there are. And now as a public company, we're able to not only extend their relationship with those corporations, or, you know, cross-sell basically, but we are able to announce these things as well. And so IMD that he's talking about there is something that was immediately accretive to our company, very synergistic immediately. We were able to add it to every single one of our platforms and our services right across the business basically. So you're going to see tremendous growth, tremendous news flow for sure. Because I mean, who doesn't want to teach patients or be involved in patient education? We know that with patient education, you get better outcomes, right? I mean, it's well known in the medical field that the more knowledgeable a patient is, the better they do. So who doesn't want that? That's the kind of, this should be the gold standard of patient care. The problem is nobody had time before. So we have the technology and the ability now to make it intuitive for everybody.
Okay. Yeah, and in previous videos, anybody's interested, we've spent a lot of time talking about the enterprise side and the value and all that stuff. So we have actually we got a question that's popped up on the screen, but I want to ask you. I mean, we have a question about what do you do? What are you going to be doing in Alberta and Quebec? I want to kind of ask, what's the goal for the U.S.? I mean, I know you're the U.S. is
Yeah,
big on
I'll address this first. I'll address the Talos Maple Alberta Quebec thing. Remember what I said earlier, and what we've always said is that we are not a virtual episodic care company, period. We have no interest to be the biggest virtual walk-in clinic in Canada or the world, and neither do the bigger companies like Teladoc. They're not trying to be focusing on virtual episodic care. They're moving towards now, and we've said this from day one, about chronic disease, whole person care. Not only to get better outcomes, but it's actually where all the revenue is. 90% of the revenue are taking patients that have diabetes and heart disease and so on, and making them better, basically, versus seeing them for a cold or the flu or just a prescription refill without giving them the whole services. So that's that whole, on the ground and virtual whole ecosystem mantra that we always use, is not only is it better outcomes, but it's where all the revenue is. So we are not trying to be faster than them or get more patient acquisition and provide more episodic care, because again, there's not much money in it, and it's not good outcomes, and there's a lot of pushback as well. We are doctors and practitioners by heart, and we understand kind of the future is going to be empowering the doctors and the practitioners and engaging the patients, not just providing a virtual episodic care, a virtual walk-in clinic. And so when we launch in Alberta and Quebec and across the US in different areas, it's because we're able to provide that on the ground full service ecosystem in that province. Okay, so when we announce Alberta or we announce Quebec or we announce somewhere else in the US, it's because we have that full ecosystem available at that point.
Okay, we have a question from George. I think the question is more about like what kind of traction do you have across. I mean, I think it's kind of a general question, maybe if you want to kind of address.
Yeah, it's hard to, I would say it's hard to say that because we have so many different platforms and technologies and so on. What I would say to you is that we have incredibly low churn, incredibly low. So I mean, to even the point, if you look at Juno, which is our proprietary EMR that we started with in Canada, they have less than 1% churn basically, and they're growing at north, I think, of 30 to 40% year over year organically, right? And that's without contracts, long-term contracts, whatever. And historically, it was just from word of mouth. Even they didn't even have an outside sales team. So we have really good retention, great satisfaction rates, and that's without pressure tactics and long-term contracts and stuff that historically others have used.
Okay, I'm not sure. Did I ask? I don't think we asked this one yet, right? Mental health apps will be huge. Thoughts on partnering with Veteran Affairs Canada?
Yeah, I won't talk about any specific contracts that we may or may not do, but what I would say is he's exactly right that mental health is huge. We've said that from the beginning. If you look back, we've always said that the big driver for virtual care was always going to be mental health. We thought that until COVID hit, obviously, and it was COVID for now. But we always said mental health was going to be the big thing that pushes people to use virtual care first. Now we don't have to convince anybody. I mean, everybody understands the value of virtual care delivery and virtual triaging and virtual, mental health counseling and so on. So, that part of it, we don't have to convince anybody, but mental health and because of what's happening with COVID is a huge, huge problem. And is only a much bigger now problem because of COVID. I mean, the mental health numbers and addiction, and this is what we talk a lot about it in our company, was already a bad problem. It's exploded now across the world and across North America. But also, I think the stigma is not there anymore, and everybody wants to talk about it. And so that's why we have the ability to work with governments and government agencies and corporations who are encouraging, who want us actually to announce these deals with them, because it's in their interest as well to show that they care about their patients or their workers or their customers.
Okay, got a question. Can you elaborate on the health and wellness work between IDEA4 and first responders?
I would have to get Dr. Mather to maybe elaborate more on that program. They have a few of these different programs, including that one they just released, focusing on the mental health and the addictions and so on with regards to that program. But I would love for him to come on one of the shows sometime and just talk, for a while just on that.
Okay, so we have a question. So, my current family doctor is not using the online records. What would the process be for transferring to cloud look like, and how will you get them to transition to using virtual?
Favorite character on The Office, so I have to give him kudos for that. Your doctor is in the minority now, luckily, and becoming more of a minority going forward. Historically, I don't blame them. It was because it was a cost to sometimes converting over to a digital format, especially if it was like a solo practitioner and so on. I'm not sure if they're working alone. The future is not that. The future are going to be group practices, hybrid clinics like ours, and technology, and basically patients having a own portal to make their own appointments and, see their records and chat securely and so on, and telemedicine. And so for your doctor, feel free to have them go to the Juno website. So go to cloudmd.ca and you can see some of our offerings, including our EMR offering. And if they're in Canada, they can use that and convert over. We make it very, very simple for them. So we try to make it very easy for them. We reduce the costs and make it so that it's easy to learn as well. So it's such an intuitive, most doctors in Canada going through medical school would have used a platform like ours. So they would have understood how to use it already. It's very, very simple and intuitive on purpose. And it would save them money as well. So again, it would save him money, him or her money as well. So again, go to our website, you can offer it and maybe ask for the Wall Street Reporter discount or something. I don't know if there is one, but
we'll have to make one. So I think that, okay, so the takeaway here is you got the platform in place so now we're waiting for 21, which is going to be the breakout year, right? This is kind of everything is kind of set up. So what can we expect to see in the coming months? Because I think this is the key thing everybody's waiting for now.
Yeah, I mean, we've done 12 transactions, 12 acquisitions in 2020. We've raised, I think, $80 million, right? And when I say that's great, but watch out for 2021, that's kind of a high bar, to kind of pass, but we're pretty comfortable with it. And so I think the key thing is bigger and better stuff, so not smaller. These are now much more transformational deals that we're doing, but also organically, we're growing incredibly fast as well. So we're already running at north of 40 million run rate, I think, with our latest acquisition. And we have 50 million in the bank. And so, we're well funded, and people have seen how we're able to use that money very efficiently to get, not just, again, we're not a roll-up play, right? So we're not just trying to get revenue or, slight EBITDA. We're actually bringing in pieces that are extremely synergistic immediately. So not only do they bring in that accretive value, but also they help every one of our other divisions increase their revenue as well. And I think that's what you're going to see in 2021. You're going to see all these, amazing standalone, profitable companies that we acquired just explode on their own as well because of the fact that we brought all these pieces together. They're working together, and you're going to see massive growth. So I think, again, we don't give projections, Jack. I mean, we go with consensus estimates. The consensus estimates are there right now with regards to the analysts. I think they say 46 to 48. I mean, we're already north of 40, so we're pretty comfortable that we're going to be able to pass that, and we're well funded. But you're going to see transformational changes in some of the things that we are able to announce now, right? So again, from the fact that we have a platform, we're able to now announce the fruits of that labor, and they tend to be quite big with bigger names and so on. I think that's going to be really important going forward, not just because of the number, but also it legitimizes our business plan and shows that it's working. And I think it creates actually more business that comes out of it. So when one big name signs on to a company like ours, you'll see other big names follow suit, kind of thing. And I think that's going to be something that's really exciting about 2021 as well. So yeah, we're just totally pumped about it, and I think we're really excited for 2021 here.
Okay, so right now, about 40 million run rate plus currently. You got so I think the big catalyst for 21 is going to be the enterprise deals, signing up 7-figure, 8-figure enterprise deals.
Yeah, so usually they're 7-figure plus per year, multi-year contracts for only one aspect of delivery, right? And so we're going to be able to start hopefully announcing more of those, but also just again all our other stuff that we're doing as well will show some fruits of labor.
Okay, and there is a pipeline of other acquisitions.
Massive pipeline. Okay. Yeah, massive pipeline of things as well. Transformational pipeline.
Transformational. You weren't using that word before, so this is.
No, I wasn't. Okay. That's the word for today, I guess.
Okay, so basically, the takeaway is what's coming in the next, let's call it, month or so is going to be significantly bigger than what we saw in past months.
Yeah, and partly because we are able to do it, but partly because we're seeing, and we've always had this, but we've seen companies buy into our mission statement as well. They really click with what we talk about, and they want to be part of that team, that part of that family kind of going forward. And so there's value in the way we approached it on purpose, that we're able to bring other great assets, great companies on board to our ideas, and I think this will be an amazing next while.
Okay, let's see what. Oh, so I was gonna say, like, it's almost like every you use the word puzzle piece, or we're using the word, but I think we should use the word facets of like a diamond. So every new piece you add is really like a facet, so it makes the whole diamond much more valuable and beautiful.
Yeah, I mean, probably what I would say it is a 3D puzzle, actually. So when you do a 3D puzzle, you start with the base, right? And then you build up, right? That's probably the way I would show it, is that we pretty much have the base for the most part. And now you're going to see the huge upside, because there's no limit to how high you can go from that platform, right?
Yeah. Okay. So I mean, it's actually so 40 million run rate. I mean, the market cap is pretty reasonable. I mean, compared to the peers, it's still significantly undervalued. Maybe you're trading at 50% below their valuation comps. So we're gonna have to see what's happening. So I want to kind of wrap up. We're probably gonna see you next in January. So
yeah.
So happy New Year, and let's see. To wrap up, top 3 reasons why investors should consider CloudMD today.
I would say number 1, great team. You can't buy a team like the ones we have, basically. Medical practitioners come from the medical field as well, but also great operators, and have really done an amazing job up to date. And with every one of our acquisitions, we've added to that team, and that's part of our filter as well, that we look for an acquisition, is the team, because they're coming and joining us, basically. So that's number 1. I think it's untouched. Number 2, I would say that everything we've done in 2020 was to prepare for the future. So that was just the preparation and the platform, like we said, for what we're going to see now, I think, going forward, which is really important. And number 3, I would say, is that we are not unknown anymore, right? So we have a lot of eyeballs on us right now, and I think that's an exciting place to be, because we are leading the way in so much of healthcare disruption right now, and I think that's important. And we love being in the lead with regards to what we're doing, and I think it'll be interesting because of the players that are coming into the space, from again, the Amazons and the Googles and the Teladocs of the world. I mean, there's some massive companies that understand the value of the space that we're in right now, and again, we're going to look forward to continuing being leaders in that space.
I would say,
last thing really quickly, Jack, I do want to thank all our investors. They've been amazing. I don't really follow all the different communities and everything else, but I know they're very active and engaged as well, which is great. We're passionate. We're excited that they're passionate about it. It's a great story, but also you are supporting something that is looking for better outcomes for patients as well, right? I mean, the end goal is not only to make a lot of money for the investors, but really have an amazing outcome for the patients and healthcare delivery. It's a win-win-win for everybody. So we really appreciate all our investors.
I would say, look, I mean, obviously, look, we're kind of, focused on stocks, making money, all that. But the reality is, I mean, not to sound like corny or anything, but look, when somebody buys any of these, small cap growth stocks, what happens is, they're buying a stock in the open market, but that valuation that helps companies, raise capital, put it into growth, put it to, again, saving people's lives, improving healthcare. It's a whole big thing. But we'll just talk about the stock. So I think cloud is a little bit like right now. It's sort of 21 is the big year. It's sort of like 20 was the booster rockets. When the rocket goes up, the booster rockets drop off, and then it breaks through that gravity to go to the moon, the Mars, and 21 is going to be the moon shot.
There you go. Sure, absolutely, or further. Yeah, absolutely. It's going to be fun.
Perfect. Okay, Dr. Hamza, thank you, and I look forward to seeing you again in January.
Merry Christmas.
More good news.
Yeah. Happy holidays.
Thank you. You too. Thank you.
See you.
Okay. Great. Let's get ready for our next presenter. Big news with CloudMD. It's going to be very exciting to see what happens in next couple of months. Let's see here. Let's get ready for ESE. Okay, just stand by. Let's see if we have our special guest, Conrad.
Hello, hello.
Conrad, welcome back.
How's it going, Jack?
Fantastic, fantastic. We're upgrading from 10 baggers. Our goal for 21 is 100 baggers. Can you help our audience?
I love it. Let's be the first one, ESE.
Yeah, is that you guaranteeing this?
You're guaranteeing it.
I'm guaranteeing. Perfect. All right. So let's see. We got a full audience here today. Okay. So again, for anybody just tuning in, our program is about Wall Street Reporter's next super stock live stream is about bringing you those stocks which have 10x to 100x upside potential. Companies going after multi-billion-dollar opportunities, multiple catalysts in place, and at a key inflection point right now. And ESE, again, is another one of those companies that fits that category. So Conrad Vasela, the CEO. Conrad, welcome back again.
Always great to be on, Jack, and excited to get into it again.
Conrad, I know that our audience is eager to learn what's happening. I mean, since you first or last you were on here about maybe 10 days ago, a lot of news. So I kind of we kind of want to learn like the context of it, like what does it mean for the company? Because I think some of your announcements have been kind of significant, but the market maybe didn't understand them, which is the opportunity basically. So I think we should start for you. So you right on Monday you announced that you're now on the OTC QB.
Correct. Yep.
So which is fantastic because that opens up ESE to the US market. So you're going to be one of the few pure play esports stocks.
Absolutely, exactly. So one of the very few pure play esports stocks, opening up the eyeballs to that US market a little bit more. And just giving us that visibility that we need to scale. And, I wanted to really touch on what happened on Friday as well with our news about Nuvei.
Yeah, that's the main reason I wanted you here today. Because I think it's a big announcement. I don't think anybody understood what it means.
Yeah, I think I really encourage everyone to go back and read about Nuvei. So Nuvei is actually the biggest technology IPO in Canadian history. So it really is a testament to the type of groups that ESE is partnering with. Have a look at their stock. It's absolutely soaring. And they're a group that's involved in the payment sector, specifically in iGaming and gaming. So it really opens us up to the opportunity to generate more revenue via payment systems. They're going to help us scale our e-commerce platform. They're going to help us engage with a payment side of gaming and esports, which is only going to scale our revenues. It's going to allow us to grow into new regions. It's going to allow us to increase our margins. It's a tremendous partnership, and I think it just speaks for itself. We continue to partner with multi-billion-dollar companies, and this is just another one.
Okay, and so they're okay. So they're going to be sponsoring your Kick team, which is the esports team.
Yeah, so that's another exciting part of this partnership is they're taking on the front title sponsorship on the jerseys for the entire year of 2021, and they're also going to be sponsoring and being the title sponsor for a lot of our esports activations. So when we do tournaments or new events, they're going to be on the jerseys, which is absolutely huge. What it does, it creates a foundation piece for our team to scale, and it really allows us to enter into new markets, do new tournaments, and be really active with this massive partner supporting us both financially as a title sponsor.
Okay, so I want to kind of maybe dive into, like, for anybody that might be new, can you give them kind of like a snapshot of ESE's whole, like, everything that you're doing in the esports space, just like a quick snapshot, and then I want to really spend some time talking about the Kick team, the value of that, the value of esports teams, because this is like a space where there's some tremendous numbers being thrown around there.
Huge upside. I mean, Forbes just came out with their top 10 list, and you go down the list, and teams are being valued at 400+ million US. And it's just a tremendous opportunity to join that list. I think that's going to be a goal for us actually in 2021, is to get into that top 10 Forbes list and have a valued esports franchise basically in that top 10 in the world category.
Okay, so the Forbes list. This is the top. The top esports teams, which is amazing. That
exactly.
This is like a whole new thing. Again, it's just like I don't know, Formula One. Is it kind of like Formula One or NBA?
Yeah, I would say
NFL.
more like. Yeah, exactly. Like you saw the New York Mets recently. Yeah. They just sold for $2.5 billion. The Clippers just sold for $2 billion+. And now these esports franchises are valuing in at 500 million US, but the upside and the growth is happening 10 times faster. And it's a global play. It's a generational play. It's a one-in-a-lifetime type of opportunity to get in on the ground floor. And then, down the road, in my opinion, you're going to exceed those valuations of those traditional sporting franchises.
You know what? Here's what's interesting, and again, we kind of talked about it, and is that the esports has more viewers globally right now than professional sports. Than football.
Way more.
Yeah,
and it's growing. And the reality is, with today's climate, it's only going to continue to grow, and we're heading in that direction. Even a lot of the traditional sports teams, they're coming into this space, so they're going to be reaching out to groups like us to enter into this space. So I just see it snowballing. And 2021, in my opinion, is going to be a massive breakout year for gaming franchises, for the entire esports industry.
So the Kick name, we should actually put up. It's K and then the 1 and then CK. So actually graphically, it's a very cool. It's just a cool brand from a graphical standpoint. So the esports teams, these numbers, these $400 million numbers, this happened pretty much overnight. I mean, it took, like, let's call it the NBA or even baseball. It took them decades to go from 20 million to a couple hundred, whatever it is, decades. Now these things are happening, in a couple of years, basically. And everybody, like you mentioned, all the I think the guy from the Patriots, the owner of the Patriots, the owner of the Cow, all these guys, they have their fingers in different parts of esports. A lot of the Hollywood, the agencies they're getting into. So what I find interesting from an investor standpoint here is that there is going to be a lot of capital flowing into the space, and the valuations are just going to lift. It's almost like, maybe this is a bad metaphor, but like the .com boom, like just the values explode, or the cannabis. This is going to be the big theme. So esports, mega theme, just getting started is kind of the idea. So how does Kick make money? What's the business model for that particular part of your business? What are the different aspects?
So that gaming franchise, so you enter tournaments, there's tournament winnings, there's distribution via the e-commerce platform, so apparel, just like you'll see in traditional sports. There's media rights, there's licensing of the actual Kick brand globally. It's very synergistic to how you'd see a traditional sporting franchise. That's why the parallels are so great. But like you mentioned, the upside is it's apples and oranges, because as you mentioned, it took 10, 20, 50, in some cases 100 years to reach those valuations. But the valuations that are coming on now in esports are literally happening overnight, within a year, 2 years, 3 years, and it's just absolutely booming. And you see the Michael Jordans, the Jerry Jones, Robert Krafts of the world, all these guys investing heavily because they already own traditional franchises, but they're not getting the same lift and that fast. So they know that this is a one-in-a-lifetime opportunity to get in early and get in fast.
Okay, and Okay, so here's a question. So what are you going to do to make Kick a top 10 team? Like, where is it now? Like, for context, where is it now, and what's the journey to get to be a top 10, and and what will it be worth then?
This is the exciting part. Signing the Nuve deal positioned us to take that first step, and they gave us the foundation piece to now go pursue that in 2021. We're going to be working very diligently throughout 2021 to go in that direction. I think as of right now, for some games, we're in the top 50 in the world. And I think a top 10 is a great thing to strive for in 2021 and 2022. And I think it's attainable.
Okay. And so if you get into the top 10 means what? That's 400 million plus valuation for the team, just the team alone, not your other business, just that.
Exactly. That's based on Forbes, the valuations that they were setting out for the other teams. They're ranging anywhere from 150 to 400 million US dollars. So it's really exciting. The upside's huge, and the great part of this is just one element of our business. This isn't our entire business. So imagine the upside. This is just one vertical of the entire ecosystem that we've built here.
So let's talk about the other components. What else do you have? I know you just announced that, was it the infrastructure deal again, which I don't think the market really understood or appreciated. That's a $12 million revenue business, and the stock didn't react. So
yeah, I really think over the holidays everyone needs to go back and read a little bit about what we're doing, because it was a huge deal. So the infrastructure play puts you in a position to now scale. So when we talk about Kick expanding to this, top 10 realm, when we talk about all these different elements of the business growing and growing fast, you need infrastructure, you need the backbone to then scale. What that did, that WPG deal, put us that entire foundation piece to then really drive it in 2021. In my opinion, it sets us to just catapult for 2021, and it puts that immediate revenue on the books, 12.5+ million. It is not dilutive at all, and it's just a great synergistic deal that lets us scale in all these different elements. And the news is going to be coming out soon, the definitive agreement. And when you see the groups that we're working with, you're going to really hope that you bet on us a little bit earlier, because it's unbelievable. It's going to surprise a lot of people.
Okay. So you have, so the verticals, you got the team, you have the infrastructure. Yep. What else? What else is
and the technology. So we have a tournament platform software that is also scalable. That's where we run and host our own leagues, tournaments, etc.
And what is, so in terms of, and I know you, before we were talking about, I think you gave a demo, you have the deal with Porsche. What is that? Where does that fit in?
So that's part of our technology arm as well. So we have a technology that allows us to do 3D track scanning anywhere in the world, and allows us to implement the sim racing model into the game Assetto Corsa. So the beautiful thing about this is once again scale. So if another group approaches us, another car manufacturer approaches us, we can then implement their cars, their branding, their entire ecosystem into this game Assetto Corsa, and we could do live tournaments, so online, all that, and scale it for them throughout the world.
Okay, so actually, let's jump into some questions. This is kind of related. I was going to just ask you. Okay, so you're doing the private placement right now. I guess how much, what are you expecting to raise? Because I think it's been upsized a little bit, right? It was upsized, and what's going to be the use of proceeds? How are you going to, deploy this growth capital?
Yeah, so we upsized the placement to 3.25 million Canadian. And the capital is actually going to be used specifically, a small portion of under 500K will be used for the WPG acquisition. So it shows you how tight we're treating that capital. The rest of the capital is just going to be put into the till and used directly for growth and hyper growth. But we're staying lean. We don't need the extra capital to do any acquisitions at the moment. We have everything secured. We're going to be well funded, and we're just going to grow both organically and through our synergistic partnerships.
Okay, so after the raise closes, how many shares outstanding?
So there will be under 50 million approximately.
Yeah. Okay, so it's going to be pretty tight still. So it's about 60 million US market cap, or 670 million market US. Okay.
Yeah, so that's one thing that really excites me. If you look at, you do a little bit of comparing to some of the other groups, we're very tight, and they're still held mostly by the core founders, and the structure is very tight and it's primed for growth.
And the run rate, because you have you got the 12 million coming in from this, what is it, the World Fund?
Yeah, WPG, yeah.
Yeah, the infrastructure deal. So with that, what's going to be the run rate like Q1?
So anticipated for Q1, we're going to have 12.5 million in revenue. Oh, sorry, annually anticipated. So 12.5 plus million. And organically, we're growing. We're going to be about 2 million Canadian anticipated.
Okay, so
in addition revenue. Yeah.
So basically like close to 15 then, right? So 2 million.
Close to 15 for 2021. So
so with the new deal, so it's going to be 50. Okay, so that's you're trading at less than 4x revenues, but basically that's pretty cheap compared to the the comps in the space. I
think one thing to note too, as a pure esports play, as it pertains to revenue, there's not a lot of groups that can match what we're going to do in 2020, and as it pertains to revenue, we'll be one of the highest grossing revenues for a pure play esports company.
Okay, so we got a comment here, very promising stuff for ESE. Advertising dollars may move away from major sports in the US due to viewership declines. Good timing. Yeah, I think basically you have just a generational shift where people who are under 30 are more involved in esports, and they're not watching football or or I don't know, baseball. I don't know, does anybody watch baseball anymore? So it's pretty interesting. Okay, let's see. Any questions here? We got oh, shocking! Very quiet day for questions here. Okay, so Conrad, let me ask you a couple things. So you got this deal that's going to be wrapping up in, when is that going to close, in January?
We anticipate January. Yeah,
okay.
January, maybe into February, but we want to close it as fast as possible because we have a bunch of deals that we're working on already that make a lot of sense to do together as a group. Like I said, the synergy is phenomenal. We just want to wrap it up and just kind of get to work.
Okay, I got a couple of people asking about Sony Music partnership.
Yeah, that's
multiple people asking.
Yeah. Yeah, that's really exciting. So we just did a live celebrity stream with Sony and Columbia Records. That's the second one we've done with Sony and Columbia Records. So it's a combination of celebrities and some of our ambassadors. One of our ambassadors, Elias Pettersson, was participating in the last stream. So he's an NHL superstar from Vancouver. And the exciting part is Sony is really impressed with what we've done in the past several streams. So we're going to be working on a larger scale partnership for 2021.
Okay. What about in terms of acquisitions? You're going to be doing this infrastructure deal. Anything else that I mean, do you have any kind of pipeline of acquisitions in place? Anything for in the first quarter that you can talk about? Give us some hints.
Yeah, we have a huge pipeline, a really healthy pipeline. I can't get into too much detail, but I think we have some really sexy stuff brewing for Q1, and I think we got to let you guys wait a little bit, but you'll be pleasantly surprised. And it's a little bit more focused on software technology, and it's going to be a really scalable, hyper growth type of acquisition. But we have some stuff cooking that's just going to continue to keep the storyline going, continue to support the fact that we're heading in this billion-dollar company direction.
Okay, so there's potential for some interesting pivotal news in the coming months. In terms of what do you see as kind of like the big opportunity like this year? Like, what do you see as what do you see the big growth? Do you see it's from the teams, from the technology side of the business? Where do you see it? The kind of where is your focus going to be, and where do you see the most kind of upside?
When I talk to the team, this is what really fires me up. We see growth in all of the different verticals. That's the best part. So we see all our verticals really driving over the next year. And the beautiful thing, I've mentioned it before, but it's like a layer cake for us, our ecosystem. When one improves, and the other element improves, and it just kind of layers on top of each other. And that's the exciting part for us, because it's so synergistic. We've set it up that way that it's a real snowball effect. And I think we're really going to get that rolling in 2021.
Okay. Brian's asking who are your competitors and what differentiates you? I guess in different areas, whether it's
I think a great parallel or comparable that we like to use is EGLX. They've done tremendous things. They're also on the TSX. They've broken past the $4 stock, and I think they've done a phenomenal job on the media side. I think our differentiator is we're operating out of Eastern Europe, so our burn rate's significantly reduced. And in addition to that, we're more of a global play. They're more of a North American play. We're incorporating Asia, Europe, and North America. So I think our opportunity for growth is that much bigger. And the cool thing is, they're pursuing a NASDAQ listing. So I like the path they're going on. I think it's something that we could definitely pursue as well.
Yeah, I think from like a market perspective, it's interesting because I noticed that stock. I mean, it was kind of very sleepy for a long time. In the last month, it really started taking off. And there's a kind of a few other companies which are sort of, vaguely in the esports space that are moving. That are what is it? I think there's one guy on Nasdaq, GMBL, which is, I think they're I don't know if they're the gaming but what's going to happen is there is, as these stocks do well, I think investors, the broader market, is going to look for the next kind of big winner, and especially at the valuation that ESE has. I mean, it's very compelling. I mean, it's only like, your thing is what, 4 or 5 times revenues, which is a cheap valuation.
Yeah, and just in general, it's ground floor. We're just starting. We laid out a plan. We're delivering on the plan, and there's great comparables that are, quite frankly, $4. You mentioned GMBL. They're a $7 US stock. I mean, the room for growth is tremendous, and I know we're gonna reach the revenues that are gonna get us in that position.
Okay, and so let's say you can get into Nasdaq, in 21. Maybe let's call it third quarter to be conservative. Third quarter, fourth quarter of 21. That would be a great catalyst, for the valuation, because again, there really would not be too many other pure play esports companies. So that's something that's very interesting. Okay, let's kind of recap. So I don't think we're going to speak before the end of the before. We're not going to do an interview next week, I don't think, unless you have some major news. So, so kind of to recap, what is, what's kind of the big story for 21? Like, what can we expect? Let's call it in the first, let's 6-8 weeks, because again, our audience, they're very short term. They're not looking 3 years out. They want to know what's going to happen, tomorrow or 2 in the afternoon, or 6 weeks out is the longest that they could focus. So, what can we expect?
Yeah, just immediately close on the WPG deal, secure that revenue on the books for us moving forward. So that 12.5 million plus in revenue, and then immediately pursue the next accretive acquisition and continue that growth and continue that pursuit of the hyper growth, scaling all of our other business lines. We obviously have the capital to do that. We're secured. And more so than anything is just continue to deliver. Like you said, people want news. We're going to bring news. If you look back to our November 2nd corporate update, we had some milestones that we wanted to hit for 2021. Well, guess what? We've hit about almost all of them, and it's not even 2021 yet. So that's the type of mindset we have. We're going to continue to deliver, continue to hit our milestones. And we're just going to be focused on those synergistic, acquisitions and partnerships, and just scale as fast as possible. We really believe that this is a generational opportunity, but we need to scale fast and we need to consolidate fast. That's the opportunity here. It's not to wait. It's to get into hyperdrive mode. And 2021 is that year, and we got to do it now.
I think I saw, was it Michael Jordan called us a generational opportunity. Is he an investor in does he own a team, or what is he doing in the space?
Yeah, he's a huge believer in the space. He has a great quote, but yeah, he also believes that this is a generational opportunity. He's an investor. A lot of the viewers you've heard of Drake, Steph Curry, all these big names who understand the culture, who understand where this is heading. They're getting in, and they're getting early, and they're big believers in the space.
Okay, interesting. Okay, so Conrad, to wrap up, our favorite question, top 3 reasons why investors should consider ESE today, especially, in the context of the latest news.
Well, it's evident. We're delivering, and we're partnering with multi-billion-dollar companies. We have a clear vision to become a multi-billion-dollar company ourselves, and it's evident by the partners that we've surrounded ourselves with. And this is we've been saying this all day today, this is a generational opportunity. The opportunity is massive. It's a ground floor opportunity. And finally, just in general, this is a hyper growth industry, esports and gaming, multi-billion-dollar opportunity. We're right in the center of it. And we're one of the few pure esports play they could invest in now and early. And we're delivering on all our milestones here.
Okay, growing revenues on top of everything. All right, Conrad, thank you. I want to thank everybody joining our live stream today, and we will hopefully see you on the next one in January. Conrad,
we're going to bring the news. Watch out, guys. We're going to bring the news.
2021.
2021, let's go.
Happy New Year, Conrad.
Happy New Year, guys.